Hi, welcome to lecture number 8 covering chapter 8 of Focus on Personal Finance. Tonight we will be talking about home and automobile insurance. So you can get insurance on just about anything you can imagine. Insurance protects you against loss by shifting some or all of the risk to the insurer. But at what financial cost to you? Whatever you decide to insure, you'll most certainly need insurance on your home, your vehicle, and your personal property. Adequate financial protection from risk is a vital component of your financial planning, and this chapter looks at insurance in your home and on your automobile. So let's start by looking at our learning objectives for tonight. Learning objective number 1 is to identify types of risks and risk management methods and develop a risk management plan. The main type of risks are personal risk, property risk, and liability risk. Risk management methods include avoidance, reduction, assumption, and shifting. So planning an insurance program is a way for you to manage your risks, and property and liability insurance protect your home and your automobiles against financial loss. And since those are usually some of our biggest purchases, we certainly want to make sure that we have those items protected. So objective number 2, assess the insurance coverage and policy types available to homeowners and to renters. Your homeowner policy will provide coverage for your buildings and any other structures on your property, additional living expenses, your personal property that's inside the house, personal liability and related coverage, and your renter's insurance provides similar protection for those that rent their place of residence. Objective number 3, analyze the factors that influence the amount of coverage and cost of home insurance. Factors that are going to affect your home insurance coverage includes your location, the type of structure, how much you have covered, the type of policy you have, and the choice of your insurance company. Objective number 4, identify the important types of automobile coverage. So motor vehicle bodily injury coverage includes your bodily injury liability, medical payments, and uninsured motorist protection, while your motor vehicle property damage coverage includes property damage liability, collision, and comprehensive physical damage. And we'll look a little closer at those. And objective number 5, evaluate factors that affect the cost of automobile insurance. So your costs are going to be dependent on what kind of vehicle that you're covering, where you live, and your driver classification. So let's begin by looking at learning objective number 1, insurance and risk management. So the purpose of insurance is to protect you and your family against financial hardship due to an accident, a death, or the like. To select the right insurance, you must know your risks. How much insurance you buy depends largely on what you can afford. So what specifically is insurance? Well, insurance is protection. It protects people against possible financial loss. So an insurance company is a risk-sharing firm that agrees to assume financial responsibility for losses that may result from an insured risk. The financial trade-offs of not obtaining the right amount and type of insurance can be disastrous. So let's look at some of the most common types of risk. Let's begin by defining some terms that are important when we're looking at insurance. The first is risk. Risk refers to the uncertainty as to the loss that faces a person or property covered by the insurance. A peril is the cause of the risk, and a hazard increases the likelihood of loss through some peril. So a hazard for automobile insurance might be drunk driving, where in a homeowner's policy it might be defective house wiring. The most common types of risk are personal risks, property risks, and liability risks. Personal risks are just that, founded around you as the person. They have to do with the loss of income or life due to premature death, illness, disability, old age, and unemployment. Property risks have to do with loss to your property. Liability risks are possible losses due to negligence resulting in bodily harm or property damage to others. Personal risks, property risks, and liability risks are types of pure risks. They're insurable, while speculative risks is one of which there is a chance of either loss or gain. Speculative risks are legally defined as uninsurable. Let's look at risk avoidance methods. Risk management is an organized strategy for protecting and conserving assets and people. Risk avoidance is just that, avoiding the risk. Just like you can choose to avoid the risk of having an automobile accident by simply not riding in the car. But choosing to never ride in an automobile might not be a practical thing to do. You can look at risk reduction, which is exactly that, looking at ways to reduce your risks. So with the example of riding in a car, you could reduce your risk of being in an automobile accident or being injured in an automobile accident by wearing your seatbelt or never driving with someone who's under the influence. And once again, risk assumption is just that. It's assuming the risk. It's the act of taking on the responsibility for the loss or the injury that may result from the risk, and that's what an insurance company does. Finally, there's risk shifting. And when you buy insurance, that's what you're doing. You are shifting the responsibility from you to the person that you bought insurance from. So let's look at the steps of planning an insurance program. Step number 1 is to set insurance goals. So step number 1 is to reduce the possible loss of income due to dying prematurely or an illness, an accident or unemployment, or property that is caused by peril, or against the loss of income, savings, or property due to personal negligence. Step number 2, develop a plan to reach your goal. Planning is a sign of maturity, a way of taking control of life instead of just letting life just happen to you. So you need to think about, what do you need to insure and how much do you need to insure it for? What kind of insurance should you buy and who should you buy it from? Step number 3 is to put your plan into action, and step number 4 is to always check your results. Make sure that your insurance is meeting your needs and that your goals haven't changed. Let's move on to learning objective number 2, which is home and property insurance. Your homeowner's insurance is coverage for your place of residence and its associated financial risks, such as damage to your personal property and injuries that might happen to others on your property. The main component of your homeowner's insurance is protection against financial loss due to damage or destruction of your house or to other structures that might be on your property. If fire or other things prevent the use of your home, additional living expenses can be covered for living elsewhere, depending on your policy and the limitations of it. So if you would have a loss, let's say due to a fire, such things as your furniture, appliances, even your clothing are covered for damage or loss up to a portion of the insured value of your home. So once again, just for the ease of math, let's just say your home's worth $100,000. That's what you have insurance on your home for. Then your things that are inside your home are usually limited to a percentage of the value of what you have. So it would usually be 55, 70, or 75% of what you had the home insured for. There are certain limitations on more expensive items, such as jewelry, or if you have a collector's piece. If you have high-end items in your home, you probably have to have separate policy covering just those items. And that's called a personal property floater. So going with the example of you had a fire in your home, and then your policy is going to cover up to 75% of what you had your home insured for, so $75,000. Now comes proving that you owned those things. So in order to be able to claim a loss against your insurance, you're going to have something that proves that you had those items in your house. So having a household inventory list or other documentation of your personal belongings with the purchase dates and the cost of the information will be critical in being able to get the value of what you lost from your insurance company. I've also known people who have walked through their entire house and like videotaped their house, so that like opening every closet door and going through each item and then storing that video tape someplace other than in their home, so that if their home is destroyed, then they would have proof of what was in the house and what they owned. The personal liability component of your homeowner's policy protects you from financial losses resulting from legal actions or claims against you or a family member due to damages to the property of others. This coverage includes the cost of your legal defense. An umbrella policy is also sometimes called a personal catastrophe policy, and it supplements your basic personal liability coverage. Your medical payment coverage covers the cost of minor accidental injuries on your property and minor injuries caused by you, family members, or pets away from your home. You may be thinking to yourself that you are bored to death with this lecture because you don't own your home and you don't care about homeowners insurance. But even if you're a renter, you need to have insurance and be aware of the ins and outs of purchasing a policy. Just like homeowners insurance, your renter's insurance includes personal property protection, additional living expenses, and personal liability and related coverage. Protection against financial loss due to damage or loss of personal property is the main component of renter's insurance, but also protects you if you do something to damage the property, such as you're renting from someone, but you start a candle burning and it gets out of control and causes a fire. Your homeowner's insurance is going to protect you. So it's highly recommended that you have renter's insurance. I'll also share a quick story with you. I had a friend who was renting an apartment and his neighbor started a fire, and what he had was smoke damage, but it was extensive, and his renter's insurance paid for him to have everything in his house cleaned, including sending all of his clothes to the cleaners or the dry cleaners and having them all cleaned or dry cleaned to get the smell of smoke out of his clothes, as well as like his couch and stuff like that. So if he had not had the renter's insurance, that was not an expense that his place that he was renting from would have been responsible for. And I didn't know that till he went through that. I would have just assumed that where he was renting from would pay for those expenses, but that's not the case.